This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Crude oil buyers in Asia are concerned that an unexpected cancellation of an OPEC Plus meeting to discuss a rise in output could drive oil prices even higher and hurt their margins. They are now awaiting Saudi Arabia's official selling prices, which were delayed until after the OPEC Plus meeting and set the tone for prices of a majority of Middle East crude sales to Asia, to assess the oil market's direction. Brent crude oil prices rallied to above $77 per barrel, the highest since 2018, on Monday, after ministers of the OPEC Plus called off oil output talks and set no new date to resume them.
Top oil exporter Saudi Arabia has raised the August official selling prices, OSPs, of all crude grades it sells to Asia. The country's state oil producer Aramco 2222 SE said on Tuesday. It set the August OSP for the flagship Arab light crude at $2.70 a barrel above the Oman-Dubai average for Asia, up 80 cents from July. Saudi Arabia set its Arab light OSP to Northwest Europe at a discount of $1.10 a barrel against ICE Brent for August, compared with a discount of $1.90 for July, Aramco said.
Moving on to the top news in the energy sector.
European Union imports of biofuel are expected to drop by a quarter this year as the bloc draws on large inventories to meet growing demand after the easing of coronavirus restrictions, the European Commission said on Tuesday. Rebounding demand for biodiesel and bioethanol in 2021 is projected to exceed the level before the COVID-19 pandemic, with higher government blending targets adding to momentum from recovering transport activity, the Commission said in a report. Due to abundant unused stocks, imports of biofuels are expected to decline in 2021 by about 25% to 3.0 billion liters for biodiesel and 1.0 billion liters for ethanol, it said in its short-term outlook for agricultural markets.
Oil slipped on Tuesday, pulling back from its recent rally, after OPEC Plus producers cancelled a meeting due to clashes over plans to increase supply to meet rising global demand. Ministers from OPEC Plus, which groups producers from the Organization of the Petroleum Exporting Countries, OPEC, with Russia and others, abandoned talks on Monday as negotiations failed to close divisions. Discussions dissolved after Saudi Arabia, the largest OPEC producer, and United Arab Emirates were unable to agree over the terms for increasing supply.
Next, we have the top news in metal markets.
The first round of China's much-anticipated state metal reserves auctions needed only one of 2 days allotted for all the copper and aluminium on offer to be sold, notices on the bidding platforms and 2 industry sources said. In a rare move aimed at cooling a rally in metal prices that has pushed up raw material costs for Chinese manufacturers, the National Food and Strategic Reserves Administration said last month it would sell 50,000 tons of aluminium, 30,000 tons of zinc and 20,000 tons of copper on July 5 to 6. The aluminium was split into around 200 lots, with the auction of the last 250 tons taking place at 7:52 p.m. on Monday, a notice on the bidding platform operated by state-owned Norinco showed.
A jump in demand for traditional lead-acid car batteries and lingering freight problems have created shortages that have been felt most acutely in the huge U.S. automotive sector and driven up lead prices globally. While other battery metals, such as lithium and cobalt, have been in demand for electric vehicles, replacement batteries for vehicles powered by internal combustion engines account for half of global demand in the 12 million-ton lead market. The United States accounts for 13% of global lead demand, but consumption has been boosted by the end of COVID-19 lockdowns as motorists seek replacements for lead-acid batteries that have failed after long periods without use. We will now look at the top news in the agricultural sector. The European Union urged London on Tuesday to consider a Swiss-style veterinary agreement with Brussels on agri-foods to end a post-Brexit sausage war row over certain goods moving between Britain and its province of Northern Ireland. Tension has mounted over trade arrangements for Northern Ireland, particularly for chilled meats, because the province's open border with EU member Ireland is Britain's only land frontier with the EU and its vast single market. European Commissioner Maros Sefcovic, the EU executive's chief interlocutor with Britain since it completed its exit from the bloc last year, said the biggest challenge for Brussels was how to rebuild trust and realign its relationship with London.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.